Hi everyone, welcome back to Slevin Figures. In today's episode, I'll be providing you all with an update of the three portfolios, dividend, growth, and Bogleheads or balanced portfolio. The focus of today's video will also be on dividend payouts. As you guys can see, the portfolio has now reached $28,000, so we're looking at some serious cash here. And the last 2 weeks particularly have been very good because the stock markets pretty much around the world have been up significantly. As we'll be focusing on the dividend payouts, that means we'll be looking at the dividend income account. We'll kick things off with the Bogleheads portfolio, then look at the growth portfolio, finish up with the dividend income portfolio, and then I'll go into the spreadsheet to show you the payouts that I've been getting. So let's head over to the Bogleheads portfolio and take a look at that. So looking at the Boglehead portfolios here, or the balanced portfolio, we can see that it's been doing a lot better as of lately, along with the rest of the stock market. As the market has rallied, the total world index fund has actually fueled the recent ascent of this portfolio. We're now sitting at 8.73%, or $519 in the green. When I last made this video, this portfolio was barely in the positive after pretty much 2 months of being deep in the red. The World Index Fund is now up, as you can see down here, 8.8% since we started the portfolio. This is due to the fact that markets outside the US are recovering really fast, much faster than the US, as those economies have reopened before the US economy. We see Germany's reopened, China's reopened. A lot of countries are actually ahead of the US due to their crisis management. We also see that we've received $139, as you can look up here, in earned dividends, which have also added to the portfolio's growth. This is a very simple portfolio, not too complicated. So that's really it. As the market has gone up, we've seen a really fast recovery. This is one of the reasons why I really recommend this portfolio for those of you starting out investing or people who are very conservative. 2 funds, very simple, low cost, and very easy to manage, as we can see here. So that wraps it up for the Boglehead portfolio. Let's head over to the growth portfolio and look at that one. The growth portfolio continues to be dominant in this comparison. We're sitting at about $3,756, or 66% growth since starting out this experiment. The portfolio only has, as you can look down here, 11 stocks in it. It's not a very large portfolio, just 11 stocks, 10 of which are in the positive, and only one that's still in the negative, this Invitae, which is a genetics company. And it's only down 8.8% so far. I've actually been using this opportunity to bring down my cost by buying more shares and drive down my cost per share in the short term. That's because I believe that this stock will actually do pretty well in the future. Obviously, this portfolio has been heavily driven by some of the big tech companies. Tesla up here being up 338%, Beyond Meat 24%, Amazon 42%. We go down here, we see AMD at 81%, and that's actually down from like 99%. Uber is now up 10%, and that was down a lot. I kept cost managing that down as well. When prices were beaten up, I kept buying that stock and averaging down. Netflix is up 37%, Microsoft is up 44%. So everything has been in a positive, and I'm confident Invitae will also be coming back in a not too distant future to help continue getting this portfolio to grow even faster. This is one of the reasons why a lot of professional investors, you can see, don't have diversified portfolios, because diversification does provide safety, but it just can't provide the same fuel for fast growth that you can get when you're zeroed in on a few companies that are going to grow fast, but also dominate this space. Diversification just helps you with spreading out your risk, but it really can't drive hyper growth. And this portfolio, imagine if everything had been put into Tesla from day one. And Tesla's a big holding of mine in my one of my other accounts. at Vanguard. But even in this account, it's been, going up like crazy. It's up, $2,000. So I basically put in like about $1,000, and that's worth $3,000 in 12 months. So I think that's pretty much enough for this portfolio. As you can see, it's not really focused on dividends, only $9.43. Everything has come from capital gains growth. And this is the highest it's ever been since I've actually opened the account. But it also did go up pretty high even before the whole crisis hit. So that kind of wraps it up for growth. We'll switch over to the dividend account, which is the one where we're going to spend a little bit more of our time also looking at the dividends that were paid out. So today's focus was on the dividend portfolio and the payouts that I've received since opening this account. The great thing about dividend stocks is that you're continuously getting paid even when the stock market is volatile, as long as your companies are not affected. Now, let me repeat that. As long as the companies that you selected are not affected. A couple companies that got really hit pretty hard during the last couple of months are, Occidental Petroleum was paying a pretty big dividend. They've cut that virtually to zero. GE used to be a good dividend payer. They've pretty much cut that down to a penny. And all the retailers, even the big retailers that were, high end, have had to cut their dividends to either a cent or completely eliminate it. So that's one of the dangers of dividend income investing. You really have to select companies that can withstand downturns. Now, this portfolio is the worst performing of the three options that I have. It's only up 1.05%, or about $62. As you can see, the market gains are actually minus 163 to this date, or about a year into this experiment. But the earned dividends of $225 are what makes this portfolio go into the positive. This is where the advantages of getting a dividend do help. At $225, we're getting about an average of $16.34 per month in dividends. But you'll see that fluctuates, and it's actually increased over time as the portfolio has grown. I do track my monthly dividends, and the whole goal of today's video is going to be to look at how the dividends have been getting paid out. As you can see down here, the poor performers, consumer discretionary, consumer staples, industrials have been hammered. REITs are down big time, but I was never a fan of REITs anyway. Financials are coming back, and I've been heavily averaging down in terms of my cost on financials. Pretty much every dollar that I put in this portfolio has been going to financials because I think they were beaten down too much, and the banks are going to do just fine. So let's stop here and take a look at the dividend tracking spreadsheet so you can see how the dividends have been getting paid out and the advantage of dividend income portfolio. So here's the dividend income portfolio dividend tracking that I do. And the advantages, again, reiterating of dividend investing is you can essentially have a stream of income coming in from the equities that you hold on a monthly basis, as long as your stocks are not affected. The companies you selected are not affected. You can use this income to reinvest in the stock market or take the money out and actually spend it for whatever you want. Here's a really powerful example of why dividend investing can be very helpful to someone who's looking to supplement their income or replace their income. When I started this portfolio, again, it's an experimental portfolio to look at it, but it's really interesting to see down here when we first started, we only got 22 cents in dividends in 1 month. Then this moved up to $2.92 the next month. And then we never really went back to that base. As the portfolio got bigger, we moved up to $7. Now it does fluctuate, and you can see that in December, it jumped all the way up to $43.36. Why is that? Well, December is the end of Q4 for most companies, and they all end up paying out their dividends at that time. Same pattern will emerge here, as you can see in March. The dividends are up again to $28. And in June, we go all the way down. We go all the way down in May to $15. But I expect in June to see another spike up this way, because that's the end of another quarter. That's that would be Q2 of 2020, right? And most companies will start paying out their dividends. This is Q1 of 2020. It's terrible handwriting, but you can probably see what I'm saying, Q1 of 2020. And we should see another spike in payouts. The important thing is, and I want to highlight this baseline, we'll never go back to it, right? We've gone past that baseline. We've gone past the $7 baseline. We will probably not get any dividend payouts that are below, I'll say $14 or $15 at any point this year. And as we move into 2021, the new baseline will be at least, $20 to $24, between $20 and $24, depending on how much money I actually put in this portfolio, which is a steady $50 per week, and for the other portfolios. So that's really it. That's how I track my dividend payouts in this account. I'm really impressed by the monthly payouts. Most of the money always goes right back into and gets reinvested into this account, because it is an experimental thing that I'm running for the next 5 years, and I want to see how the total returns work out. That's really it for today's video. If you enjoy the content, please subscribe and hit the like button so others can find the content. Thank you very much and have a good day.